Okay, so I want to welcome everybody to our IRA seminar, webinar. I'll give a little bit of a background, first of all, about myself and about what we're going to do over the course of the next short while. And I'll also introduce our guests to you. As you can see, we have Alex Perny from Advanta IRA, and we'll be having in a little while, we'll be having another guest from Palladium Group, Abe Levin, will be joining us as well. And there is a chat button. So if you have questions as we're going along, things that aren't clear, or you want to have other questions addressed, please feel free to type in all your questions, and hopefully we'll have enough time at the end to address and answer all your questions. So welcome, and it's nice that we have quite a large turnout, and also people from around the world, from the States and Canada, and here in Israel. So welcome one and all. Yitzchak Hutner, and I've been an independent financial advisor for more years than I guess I want to say, but certainly over 25, 30 years. Been affiliated with Financial Resource Network for over 20 years now. I'm a former Canadian, graduated from McGill University in an undergraduate degree and a graduate degree from YU. Many years ago, I made Aliyah more than well over 30 years ago, moving to Israel. So first of all, Financial Resource Network, as many of you know, been doing seminars, financial seminars, actually since 1992 at different locations, AACI, at Israel Center, and since Corona, more towards Zoom and these kinds of webinars. So welcome to one and all. So Financial Resource Network, which does traditional portfolio management like at Fidelity and Charles Schwab and that. But tonight we're going to be discussing a different aspect, and that's to do, of course, with your IRAs and what that money, which is so critical to each of us, especially as we get older. So what we can do with it, and hopefully you'll hear, we can unlock a lot of opportunities for people. My particular area of specialty since the late 90s has really been in the alternative markets. Alternative means alternative to the volatility of the stock and bond markets, and to be able to offer investors alternatives to not just be in mutual funds or CDs or stocks and bonds, but to also have very safe but yet high returning investment returns, and to also stay away as much as possible being correlated to the stock and bond markets. I'll put up for a minute because a picture's worth 1,000 words. Yosef, if you can put up the graph from the MSCI, the Morgan Stanley Composite Index. But basically, you'll see at the top part of the graph, it's a comparative report from 2000, January 2000, till just the last quarter in this year. It's almost 23 years. If you look at the, it's hard to see, but if you look at the bottom line from 2000, you can see in 2001, the big dip was a crash. These are the markets. The Morgan Stanley, and it's not even the volatility of a high market. It's not like the S&P. This is the Morgan Stanley. And you see the growth, but then you see the crash again of 08. And you can see how monies have returned over all the whole time period. But yet the line above, which is a particular alternative investment group, you see how it's not so correlated to the stock and bond markets. And you also notice that they don't have the same kind of dips in the markets. Like in 2008, you see a very little dip of about 8% versus when the markets went down about 45% of one's portfolio. If you were able to see the figures below, I guess it's too small to see, but basically you'll see even if the returns were the same, not being related to the markets, and you can see you come out ahead. But it's also important to note when the markets are down, how many years does it take till it gets back to where it was? And what if you needed the money during that time period? So the line above, the alternatives, is trying to show you that a certain amount of your money, if it's in alternative investments, You may not get the total upside when the markets, go way high, but you also won't get the lows like the markets going down. I can't. It's too hard to see the figures to go into more details, but just keep that picture in mind that what we're trying to do is to offer people the top line and not the bottom line, to be able to show how you can avoid the ups and downs of the volatile markets, and having a certain portion of your money into some safe and solid returning alternative funds. Okay, so basically we can take that one down. And basically, so that's part of the goal, is to understand what kinds of alternative investments can I use in my IRA. And I'll tell you really what precipitated this was a number of years ago. I had numerous clients with IRAs and not earning very good returns. And they asked how they can use their IRA money to be able to invest in different things to help grow their retirement funds substantially higher. Let's put up one other graph, Yosef, if you don't mind. Yeah, there you go. This is an actual client of mine who, as you see, in February 2021, their IRA was just under 800 and whatever, 850,000, let's say. It grew a little bit, and then by a year and a half later, you can see that almost 900,000. Their IRA was down to 575. So this particular person said, "What can I do with my IRA that I'm losing so much money in the IRA, and it's not growing? And given what inflation is at, it's eroding whatever monies that I do have." So therefore, we did look into ways to see what could we do with traditional IRAs, and how can you move a traditional IRA like this one, which isn't producing so well, or even those that are growing at a decent rate, but want to grow it much more. Instead of growing at 5 or 10%, it can grow at 15 or 20%. Over time, your money will double, of course, much quicker. So that's where we come into we researched different IRA structures and how one could move their traditional IRA to what's called a self-directed IRA. And that's the whole purpose for tonight's seminar. So therefore, we found one of the leading companies in the United States in this field of IRAs and self-directed IRAs is Advanta IRAs. And basically, our special guest today, who I'd like to introduce him to the program now, and he'll be able to address the main issues, and to understand also, by the way, that the movement from a traditional IRA to a self-directed IRA, where you can then hold alternative investments, is not a tax event at all. But we'll hear more from Alex Perny, who's he's a certified IRA service professional, and he'll be able to explain specifically how you can change your IRA to benefit by being able to hold many different alternative investments like real estate and other things to greatly improve one's growth in your IRA. So without further ado, welcome, Alex, and thanks for joining us on your weekend on a Sunday to join our group. To be able to enlighten us with how we can be more effective with our IRAs. Thank you.
Oh, it's my pleasure. Yes, thank you so much, and Yosef as well. Thank you very much for having me on today. It's certainly my pleasure to bring this information to people, and especially for those that maybe are a little bit farther removed, at least geographically, from the United States, that might have retirement plans that, just by virtue of not kind of being, located in the United States, you might be, again, a little bit separated from, some of the more topical information regarding these. But in any regard, specifically to IRAs, this type of information really isn't too prevalent to a lot of people. And that's really kind of a function of the fact that your large financial institutions such as JP Morgan Chase, Bank of America, the people that administer a lot of IRAs and retirement plans, have a vested interest in just selling you stocks, bonds, mutual funds, and kind of the traditional suite of typical investments that you're used to with retirement plans. So what I'd like to kind of do is first give a little bit of background about our company and what we do, a little bit of information about kind of why you might not necessarily have heard about doing these types of investments in retirement plans. And then I'm going to get into the function of how it goes to move into this type of plan and be able to, invest in alternatives, as Yitzchak had mentioned, that are outside of your stocks, bonds, mutual funds, and the like. So with that, firstly, Advanta IRA, we are a third-party administrator of retirement plans. And what that means to you is that we can hold things like IRAs, Roth IRAs, any type of retirement plan that you might have had from working for a US-based company or in the United States. If you're now an expat from the United States living in Israel or somewhere else, you can use our service to move your old retirement plan funds from another custodian to us. A little bit about our company. We've been in business for 20 years doing strictly alternative investments. We didn't kind of start in the traditional realm and just start dabbling in this. We've only done non-traditional private stock, real estate, anything outside the stock market for the entire length of our company being in business. Currently, we have around 10,000 clients doing specifically just this, and we administer about $2.6 billion of capital under administration for our clients. And again, strictly just being in the alternative or private sector. So a little bit of kind of baseline for those of you listening to us. You may not necessarily have an IRA right now, or you may have an IRA, but it's important to understand what type of retirement plans that you might have in the United States that can be moved into this. So if you worked for a company, you might have something called a 401k or a 457 plan. If you worked for the United States government, you might have something called the thrift savings plan. Any of these type of US-based pension funds can be directly rolled over into an IRA. And the nice thing is that there's no tax penalty for that. There's no type of additional penalties. It's simply just moving from one retirement vehicle that is offered into another one. The same kind of tax parameters still definitely hold true. I see a few questions popping up regarding the IRA stuff. If you do have questions, drop those in the chat and I'll kind of pepper them throughout when I'm talking to make sure those questions get answered. One individual just asked, can an inherited IRA be self-directed? Absolutely. So it's kind of a good segue into the types of plans you could administer. So again, any type of employer-based plan. So if you work for someone and they offered a pension, those can be rolled over into an IRA. Again, no tax, no penalty for doing so. You're just changing the vehicle. Now, the types of plans, let's say you don't have one. Let's say you have an IRA at someone like Fidelity or Charles Schwab. Those can be directly rolled over. There's no kind of penalty for doing so. It's just a matter of you wanting to do it, opening an account and having us transfer those funds. So if you have a traditional IRA, if you have a Roth IRA, if you have something called a SEP IRA, a simple IRA, again, an old 401k, an inherited IRA, whether that's traditional or Roth, those can all be moved over and rolled into an IRA that we could potentially administer and you could utilize to purchase things like private stock, limited partnerships, any of those kind of things. To the question about withdrawal rules applying on an inherited IRA, yes, and that's definitely something to be cognizant of. So further to that, kind of the impetus for people wanting to do this, as Yitzchak mentioned, is that you could potentially see different risk profiles and different price point fluctuations in your actual investments that you're doing. But one of the functions of investing in the private realm is that you have a lower degree of liquidity with your investments. And that's definitely something to be cognizant of. But it does play well into the nature of retirement plan funds. These are funds that most people aren't necessarily looking to use today, tomorrow, in a large sense for their normal living expenses or, exactly what they're doing. You can afford to have a little higher degree of illiquidity within an IRA, which plays very well into this type of investment, something that doesn't have a readily tradable market where you can buy, sell, liquidate. Being able to have the opportunity to invest some of your retirement funds into something that is going to be potentially a little bit of a more stable growth vessel, that certainly is a benefit. Now, to the question about liquidity for RMDs, remember, required minimum distributions are a function of the value of all of your pre-tax retirement plans. So you don't necessarily have to take your required minimum distribution from each individual retirement plan. You can satisfy it from one if you're not self-directing the entire thing. And even if you're not liquid, you can always distribute an asset in kind intact. So that means that if you have a value of something, you can always distribute the asset to yourself personally, and you would, and from the IRS's standpoint, it would look exactly the same as if you had just taken out cash from the account. So again, liquidity is not always a necessity. It might certainly make things a little bit easier. But if you invest in something that is illiquid with an IRA, or again, has a degree of illiquidity with it, or you don't have enough liquid cash to satisfy a required minimum distribution, it's not going to, bring everything to a screeching halt. There's, some functions that we would need to look at, and, we're very familiar with that by virtue of us doing it for so long. But again, these are very good questions specific to inherited IRAs. Now, further from that, the income that you might see from these types of investments, because typically private stock investments might have some type of preferred return that's paid out, something that is maybe paid out on a quarterly basis, monthly basis, biannually, annually. The payment structures for these types of assets, if they do have one, are not going to play into reducing your annual contribution limits. If you're someone that is still making annual contributions, income from a related asset in an IRA is unlimited. So you can make as much income off the investments in these types of plans and not have to worry about it reducing your annual contribution limit. That's one of the really nice functions of this, is that you get the ability to take these retirement plan funds that otherwise would not be able to be invested in these types of assets and invest in these types of assets without any type of undue penalty or any type of cumbersome overwatch from really anyone. The other nice thing in doing this is that, one, you get to open up more of your capital to a wider variety of investments. I'll kind of go into a little bit of the benefits of doing this. Is that, one, you get to open up your capital to a wider degree of investments. And strictly what we do is not just based on private equity. Certainly, Yitzchak and Yosef invited me on here to kind of speak to the specifics of more of the private stock, but I just want to make sure you get kind of a clear picture of everything you can do with this. And the nice thing, Advanta, we don't sell investments. We don't offer financial advice. We strictly act as a neutral third party to the investments that you would like to do. The nice standpoint from that is that we maintain zero conflicts of interest. So if you wanted to invest in a certain project, and then maybe you wanted to invest in something that might be in a similar function to one of your existing investments, we're never going to tell you no. So we're not going to say, you know what, this has a conflict of interest from being too closely related to something else. You're always going to be able to do exactly what you'd like to do, so long as it doesn't violate IRS rules and regulations. And the nice thing to that point is that there are a precious few of those. For once, the government stays very hands-off on the kind of fine-tooth legislation of what you can and can't do. Basically, here's what you kind of need to understand in a broad sense of what you can do with a retirement plan. You can't invest in a life insurance policy, and you can't buy anything that's collectible. Past that, it's really kind of up to you to find an investment that suits your needs, that suits your risk profiles, that suits, what you're looking to accomplish. And basically, we can kind of make that happen. So again, the nice thing is that by utilizing a platform like this to invest in alternative assets that could potentially offer you a little bit of a buffer from the very volatile markets, whether you're investing domestically, whatever that means to you, whether that is something more close to home, such as those of you that are in Israel right now, those of you that still live in the United States, Canada, it allows you a much broader platform of investing. And the other nice thing is that you're not constrained to investing in projects that are located in the United States. A lot of bigger custodians will say, you can only, they'll only get things listed on a U.S. securities market. But we have clients that invest in projects, again, plenty of clients that invest in things in Israel, in Europe, really in anywhere else. If there's a project you'd like to do, no matter where the investment provider is located, you can kind of make that happen with an IRA. And to kind of round things out, because they wanted me to kind of package this into about 15 minutes, I really like people to understand that it's, again, I don't have a ton of time to kind of, bring you a ton of detail on this, but what I like people to kind of take away when I have these, 10, 15-minute spots within presentations is that The high level is that if you have a retirement plan, if you've worked in the United States or you had some type of U.S.-based pension plan, 99% of the time, those can be self-directed. And what that means is that you can utilize a company like Advanta to move those funds out of that retirement plan in order to invest in a particular project that you feel would offer you better or more stable returns than otherwise you would be able to do with that current custodian. And just had a question that boasts a nice bookend on this. Is that so you're simply an administrative firm on a personal basis and relieving the owners for doing this? Let me try to answer that question as best as I can. So we are a IRA custodian, meaning that we do indeed, yes, administer these retirement plans, and the individual client is in the driver's seat making every single financial decision. We're simply in the position to make sure that IRS rules and regulations are maintained, and also to make sure that any type of IRS reporting and kind of the framework that the Internal Revenue Service puts out for how these plans have to be held in custody is maintained and done in accordance with their rules. So again, I think that kind of answers your question. If anyone does have any questions they would like to consult with me further, I'm certainly always happy to set up a one-on-one consultation. None of that costs any money. I'm not going to, gatekeep that kind of information. I'm sure Yitzchak or Yosef would be happy to send out my contact information at the end of it. I'll put it in the chat as well. So please feel free to reach out to me. Just for your own information, I am located on the east coast of the United States. So that would put me 7 hours behind Israel time. So shoot me an email, set up a Zoom call if you are located outside the United States, and we can get you taken care of, or I can certainly make a WhatsApp call as well if you prefer to speak on the phone. So I really want to thank Yitzchak and Yosef for inviting me on today. I always enjoy getting to talk to people in all parts of the world. And it's one of the great parts about my job is I get to interact people from all over the place. So it's always nice to speak to y'all over in Israel. So again, I'll kind of bookend it there. And again, I'll turn it back over to Yitzchak. Thank you so much for having me today.
Terrific, Alex. Well, you're welcome to come and visit us here anytime.
I would absolutely love it. It's one of my one of the places I've always wanted to get over to is that area of the world. So I would certainly be happy to have a tour guide. I'm sure as good of a tour guide as you would be.
And I promise you, it won't be boring.
I will leave it at that.
Thank you very much, Alex. And yeah, you'll put in your contact details, but we'll also be sending out everybody's details as well. Thank you again. And I just wanted to mention as well, for anyone else who would like to have other questions and that, please use the chat button at your screen. And then we'll also hopefully leave enough time at the end shortly to be able to address maybe more of your questions and answers at that point. But I just also would like to mention, which is very important, that the seminar is really for information purposes only. We're not trying to sell anything. It's an informational seminar, and it's not an offer to sell or to encourage you to make any decisions about anything discussed or presented.
Just real quick, there was one question last to the IRA. Correct. We are not advisors, Karen. But if you'd like some more pointed financial advice, I'm sure Yitzchak or Yosef could certainly point you in the direction of that, something topical to alternative investments. We certainly do have some people here based in the United States that I could refer you to as well. But it would not be something that we could handle in-house. It's just not the business that we're in for offering financial advice. With that, I will finally turn it back.
Very good. Yeah, generally what happens with clients or people have had interest over the past long while as an independent financial advisor. So I would then be referring people, and we would be working through Advanta or working with Alex or any of the other staff that's there. So if people have specific questions of financial advice, we're more than welcome to be in touch, and we can follow up after the seminar. Also, I'll mention that those who are registered for the seminar, you can take advantage of a free financial consultation meeting that we have. It's a good segue to mention that at this point. So there's a button to claim my free consultation at the bottom of your screen. You can click that, and then you'll be the first people in line for us to be able to follow up afterwards with you, so that we can discuss each person's financial situation privately, confidentially, and to be able to perhaps direct you to where you need to go. So at this point, I'd like to be able to now, since we talked about moving your traditional IRAs to a self-directed IRA, and you could put it into so many different things, as Alex mentioned. So we thought it would be worthwhile to be able to bring to the program an alternative investment company, Palladium, and we would bring into the program Abe Avraham Levin. He's the head of acquisitions for the Palladium Group, and he'll be able to outline some of the different funds in the alternative investment field that you can get an idea about. So without further ado, Avraham, welcome.
So thank you very much, Yitzchak. So as you mentioned, I'm Director of Acquisitions at Palladium Group. So I'll just tell you a little bit about Palladium Group, and then we'll give a real-life example of an alternative investment in real estate, which would be an option for a self-directed IRA. So Palladium Group are developers. We've been developing for almost 25 years. We focus on land acquisitions, design and permitting, building, stabilizing, and then exiting. So a typical contractor, we buy the raw land, go through the entire process. If it's a multifamily building, we fill it up, and then we put it on the market to sell. That's a typical development process. So we've done, Baruch Hashem, over $500 million of development so far. And our strategy really is to focus on low-risk projects. So we look for residential areas that have high demand and high demand drivers, so there'll be continued demand. We've built in Philadelphia. We've done a lot of student housing over there because there's a lot of universities and higher level education institutions. So off-campus housing has worked very well for us. And we've worked with the municipalities for affordable and low-income housing. Yosef, if you could put the slide up for Palladium Group. So this is a project that we've developed. It's in an area called Northern Liberties. You have the address there. And it's 71 units. It's a 5-story building, Class A multifamily luxury building. This is in Philadelphia. So what I want to focus on, especially for IRA investment, is an investment that would have a considerable stability, something that we can project the returns on and have that kind of safety. So Yosef, if you could turn to the next slide. Yeah. So here's a quote from Greysteel Multifamily's report for the first quarter of 2023. Philadelphia's annual rental performance outpaced the nation's 1.2% growth rate and is among the strongest of top 10 U.S. multifamily markets. And the question is, what makes Philadelphia one of the top markets, one of the top rental markets in the United States, and why do we pick it? And the answer is Philadelphia has that stability, and it has that steady growth. For example, Philadelphia is known for its eds and meds. Education, you have the University of Philadelphia, Drexel University, Thomas Jefferson University, Temple University, St. Joseph's University, and more. There are so many different universities attracting people from in-state and across the United States that come for their education in Philadelphia. The medical industry is huge. It accounts for about 15% of the jobs, and education is about 6%. The medical industry is considered very stable, and it also has growth. People can earn well in the medical industry. So you have all these universities attracting people to Philadelphia, and a lot of them stay on and work within Philadelphia. On top of that, Philadelphia is within a 1 day's drive of 40% of the population of the United States. So as a hub for logistics, those are very strong numbers. So Philadelphia as a whole is stable and steady with steady growth. And within Philadelphia, there's a sub-market which has seen tremendous growth over the last decade, and that's what I want to focus on. So Yosef, if you could turn to the next slide, which will show a little map. So here you see a small map zoning in on a part of Philadelphia. You have towards the bottom, you have Center City, which is where a lot of the jobs are. And if you see the little flag pointing to 1222 North 2nd Street, that's where this project is located. So we're on the border of Northern Liberties and Fishtown in Old Kensington. This submarket is the hottest submarket right now in Philadelphia. The population has almost doubled in the last 10 years. So there's a lot of new development happening. The government has granted funding to improve the neighborhood look and feel. And alongside with that, there's a lot of new businesses that opened up in the area, bars, cafes, and restaurants that are catering to the demand of the renters that want to be here. And that also further brings more demand to this gentrifying market. As the businesses open up, as the conveniences and amenities are there, more and more renters want to be in this area. I want to go to the next slide. And there you'll see a street view of the building as it's built. It's brand new, so it's just out of construction, and we filed for a certificate of occupancy. It's a very high-end building. As you can see in the numbers on the left, there are 5 circles. The bottom left circle shows the average household income in a 5-mile radius. That's $70,762. If you look at the bottom left of the numbers under that, it shows the average household income for this sub-market, for the 1-mile radius. It's not double that, but it's significantly higher, 121, 409,000. The renters that are coming to this market are young renters with a median age of under 34 years old that are earning well. A lot of them are people that went to the universities in Philly. There are over 40,000 degrees given every year from the universities in Philly. So there's a tremendous amount of people coming to Philly from out of state, people from within Philly, and people that are able to pay rent for this sub-market are moving here for the lifestyle, for the culture, for the restaurants, cafes, bars, and other amenities that we have over here. Something else I want to say about this project is that the city discontinued tax incentives for developers to build new buildings. So this project is already built and it has a 10-year tax abatement. New projects are not going to have that, so we expect new construction to slow down significantly. So together with the demand that we've seen over the last 20 plus years on this submarket, 10 years, there's continued demand, and we expect less construction to happen in the future. This is the kind of deals that a company likes to do, where we have very strong demand and low risk. We'll just turn to the next slide, which will show you some of the metrics for this deal, so we can put it down to numbers. So the total costs in this project are development costs, and cost to stabilization is $29 million. The total equity is $4.5 million, the remainder being a bank loan. What we're offering to investors over here is a 22% preferred return, meaning if an investor will put in, let's say, $100,000 for 1 year, they can expect to earn 22%. If it takes us 2 years to sell, so they'll get 44%. This is a short-term hold. Like we said, our typical business strategy is we go all the way through the development stabilization stage and then exit. We're able to exit this property and make money even in today's interest rate environment. The reason is our costs are low compared to what our income is projected to be, which is about $2.5 million, which means we would stabilize, and that's the number on the top right of this slide, at an 8.5 cap rate. Buildings like this historically have sold at around the 5% cap rate. If we had to sell this building at an 8.5% cap rate, investors wouldn't make that 22% return. We don't expect that to happen anytime soon. Our brokers, and we've received offers already to sell this building at a 7% cap rate. At a 7% cap rate, even if we held this building for 2 years until we stabilized, investors would make their 22% annual return. So just to summarize, this is an example of an alternative investment in real estate. It's not tied to the markets. It has a stability because of the city that it's in, because of the sub-market that it's in. The income comes from tenants that are earning very well, over $120,000 a year. We have some retail space on the ground floor. We're talking to tenants for that space already because of the high demand, and they typically sign a 10-year lease with annual increases, 2 or 3%. So this is an option that I wanted to share. Thank you, Yitzchak, very much for your invitation. And if there's any questions, you can put it in the chat on the side.
Terrific. All right. Thank you very much, Abraham, for that. So that's an example that you could have in your IRA once it's moved over to a self-directed IRA, and to be getting those kinds of returns that it's like a guaranteed 22% for a year. And if it went 2 years, you'd have 44%. Compare that to what your current IRA is doing. And there's a lot of options, but these are just for information purposes only. So thank you again, Abraham. I'd like to just open up now to any other questions. I imagine, Alex is still here. Good. So everybody stay around. Let's see if there are those who are with us. If you have specific questions that you feel comfortable to ask at this point, either to Alex, myself, or to Abraham, now is probably a good time.
Apologies, it doesn't look like I'm able to unmute people who are not one of the...
You can't unmute. Okay, so if anybody else has specific... I know a few people have already clicked the claiming my free consultation. So as I know on this, we've done so many seminars over the years that generally people have questions in that, but they want to be able to meet personally and privately in that, which we'll be able to do for any of you who would like. So you can just click the free consultation button. Abraham, what about all the anti-Semitism in the U.S. and in spite of the success of Jews in the U.S. being a post-war born individual in my late 70s, what is going on is no different to what happened in Europe to pre-Germany and Austria, and the Jews will soon be... I don't think that that's part of our IRA topic. You're asking that in terms of being, is your question because concern of what's going on in the United States, that maybe you don't want to have your money there or to invest there? Is that where the question is coming from? Oh, why invest in the U.S. now? Abraham, you want to take that as any? And by the way, I'll just mention to people that if you are interested in certain alternative investments that are based in Israel, we also have that as an option too. So you don't have to be investing only in the United States, or you don't have to invest at all in the States, but your money is there. But there are other options for investing in terms of Israel. We have wonderful opportunities here too. So Abraham,
to that, sorry, just wanted to chime in real quick to that point. The nice function of an IRA, and it certainly is, I feel so terrible that that's even a question that needs to be asked. But specifically to that point, the nice thing with at least IRAs is that the only constraint to the location of where you actually deploy the funds is essentially you cannot have them invested into a country that is on basically the State Department puts out a list of countries that U.S.-based funds can't be deployed into. So think things like Syria, Somalia, countries individual to that. I think there's about 8 of them currently where you can't actually have funds that are held or custody in the United States deployed. To that point, we certainly have plenty of clients that have holdings that are wholly outside of the United States, so that are invested in projects in Israel, Eastern and Western Europe, Central and South America, really all over the place. So if there's a project where you would like to be invested external from the United States, we're certainly happy to accommodate that and make it a workable solution for you.
Okay. Yeah,
currently that list I believe includes Iran, Somalia, Syria. I want to say Russia present with the current injunctions on Russia. But those are the big ones that pop off the top of my head.
Terrific. Okay, Avram, reasons to still invest in alternatives in the States?
Yeah, I think what I would say to that is you don't have to live where your money is. Money is green wherever it grows. So, if someone's not comfortable living in the United States for what's happening and they want to live in Israel, they're more than welcome to. This is purely investment. So everything I was saying about Philadelphia, I'm not trying to say that that's a place to live. I'm saying that that's a place where we were able to make money in the past, and we hope to continue to be able to make money there in our investments in the future.
Okay. The question of minimum level of investment. Well, each investment has different minimums. Again, if they're asking level of investment minimums, I guess it's for the project, Avram, that you were talking about.
So in this project, we have investors investing anywhere from 50,000 to 250,000. What I do want to mention is that the biggest investor in this project and all our project is Palladium Group itself. So we'll certainly have about 50% of the equity in this project will be our own.
Okay, the next question from Karen. If I'm interested in a real estate project type of investment as a first step, is it possible to transfer only part of your IRA to this type of IRA, or is it all or nothing?
It is certainly, yeah. Portions of IRAs can be transferred. You're under no obligation to kind of break up and only hold funds at one IRA custodian. So we have, I would say, the majority of our clients don't solely use Advanta for the entirety of their investing portfolio. They might have an account at Schwab, transfer just a portion of what they want to use for a project to our platform. And kind of further to that, it's also important to understand what Advanta does not do. We don't do stocks, bonds, mutual funds. We're not a broker dealer. So if you wanted some more traditional investments, and diversity is a very good, I think we all can agree that diversity is a good thing when it comes to investing. Having just using Advanta kind of for our focused effort on the alternatives is what a lot of clients do. So they might have a Schwab, a Fidelity account, transfer just over a portion to then in turn deploy into that a particular investment vehicle.
Right. And I would say also to Karen, and I see Abraham mentioned here at Schwab. So, through Financial Resource Network, most of our clients are either at Fidelity or Schwab. And if they are moving their IRAs money over, I don't encourage them to move the whole thing over in any event. So you should diversify, keep a certain amount, diversified in the markets, and to move a certain portion of one's money over to self-directed IRA. Those things we can also talk about, when we follow up after the webinar. Okay, good questions. We may have run out of questions for the moment. Thank you. Okay, thank you all. All right, so very good. Are there any closing remarks, Alex or Abraham?
No, just thank you very much for having me on with y'all today. I really appreciate it. And again, it's so wonderful to be able to, reach people in different parts of the world. And I really enjoyed being on with y'all today. Terrific.
Thank you. And thank you, Abraham, as well for joining. And thank you all for taking the time to register. And for those who would like to follow up, please send us your contact details and we'll be in touch with you. And you can claim your free consultation, and I look forward to you joining us again for our next webinar. Thank you, and good day.